right. So this week is all about risk management. Pretty much all of this comes under risk management. We've got stops, a lot about stops, because they are so important. Since I understood stops, I just use them in every trade. If it hits them, doesn't matter. I'm out. Position sizing, how to learn how to position size and sort of scale in to trades. And scaling. There's a bit more involved with that, but you'll see as we work through it. So remember, it's just a game. You love this. That trading, if you miss everyone, pick up the coins. Leave some banana skins for people. And we see where we get to at the end. But it's all about just holding on to your money and not getting fucked over by all the games, because there's so many games going on out there, so it's to know about them. And not again, I've played this. It's always happened. There we go. And it's a bit like Monopoly, eh? Play Monopoly, go around the board, buy a load of stocks, buy a load of property, and build a load of houses, build a load of hotels, and then hopefully people land on it. Or if you fuck up, you got to go to jail and lose all your property, lose all your houses, and you got to start all over again. So stops will help you blowing up your account and having to start again. This will keep you in the game, even like 1,000 paper cuts. You're like, it help you learn. So risk management. So what is risk management? Without risk management, your account will go, it will just get smaller and smaller and smaller, and it will get smaller really quite quickly because there's no, what's the word? There's no, it's when, I suppose, the addictive nature of it comes in and we start overtrading, we start betting, it's a gamble rather than actually, when you use your risk and you understand it, it's actually, there's a mathematical equation, a probability, if you work right, that you will make money. Even like me, I only make 27% right trades, but I'm able to make money from that. So this is sort of what happens when you first get into trading. And I was a bit like this. You, like the novice traders, the first thing we think about is gains. Like, how much am I going to make? We're usually getting up here. You're like, yeah, wicked. It's going to go to the moon. So it goes to the moon a little bit. And that's what we're thinking about. We're thinking, how much am I going to make? How much am I going to make? But we haven't thought about, what if it goes down? Because when it goes down and it goes past our entry point, it keeps going down. We just think it's going to go back. It'll go back one day. It'll go back one day. It'll go back. Oh, shit. It might not go back one day. And then when it does start going back one day, we get out because we've shit ourselves. And again, when we're new, we don't. I know I've spoken to so many people recently and no one uses stops. And I'm like, oh, God. Like stops are the most important thing. And I only use stops to begin with, as I told you my story, only because I read that book and the Naked Trader used 10% stops. I was like, oh shit, yeah, I better do that. If he's using it, I better do it. And we're not told to look after equity. And the Naked Trader, really reading through his books, I didn't learn about how to look after my equity. And it's not until I got onto Mark Minervinis when I started to understand it more. And also Trading with Rainer on YouTube. He was really good. And because we haven't used stops, we get attachment to a trade. Maybe there's interesting stuff in the psychology going on that the belief of I'm not good enough. If the trade goes against me, I'm not good enough. And there's lots of weird, interesting things going on. But basically, if we don't get out, then we can hold it and hold it. It might go down 20%. Oh, it's always going to come back. Then it goes down 30. Then it goes down. It can just keep going and going and going. And it just makes us feel even worse and worse when we look at our account. We've got a high probability of blowing up our accounts when we don't use stops. We can grow our accounts, but then if we don't use stops, I've heard of lots of people, they just blow it up, and you can be done really quickly. And people as well lose holding trades for years. And the issue with losing trades for years is that it does something to your psychology. There's how can I explain it? There's the attachment to it, but also there's pain, there's resentment. We're holding on to stuff. And then, to be fair, a lot of it is probably through childhood, but it's just to let go of it. Oh, cool, I lost the money. It's like, let go and accept it and start again. So for me at the beginning, even though we all want to make the money, it's like, forget about the profits. Hold on to what we started with. That's the name of the game, really, and hold on to what we started with and slowly build it up. So stops, the most important thing in trading, which most people don't use. So stops, this is how I look at it. Simply, the first three things is never place a trade without a stop, like ever. Like never let anything run over 10%. Sometimes it might do, but it's not that. When I first started, 10% was my barrier. But now I think I have to. Well, you'll see a bit later on. But most of mine are maybe 5%, 6% is my biggest. I'm usually trying to keep my stops nice and tight. It's because if I'm entering at the right place, I can have my stops nice and tight. But if I'm entering where it's getting a bit hectic or a bit fluctuating or a bit volatile, then my stops have to be wider. So that's why it's understanding the VCP aspect of the patterns. Then we can get into a stock or a commodity, a Bitcoin, crypto, whatever it is. We can get a nice tight, really nice tight area where the volatility is dropped right down, like here. So this was, look at this in the firms. This is like gold. If further out, this is the volatility is coming right down now. So I'm sort of buying in here and having my stop below here and here. And why I've got my stop below here, because prices keep coming and hitting this trend line. So if I'm a bit further away and we've got these mean averages here, if price does come down, in theory, if everything goes right, it will bounce off and then come back up. But you'll see once price starts to go, like the first mean averages, 10 daily and the 20 daily, they start to break away from the slower ones, and they start to then hold price up. So once you see that, you're like, oh, this is looking quite nice now. And yeah, as we see later, I would look at buying this as it comes out, when it comes back down, and maybe when it goes off again. But it's keeping these stops tight, because if price doesn't, like as we got here, so we've got what would that be? That's higher low. We've got a higher high, higher low, higher high, higher low, higher high, higher low. So that's actually given to the structure as well, which we're looking for, higher highs and higher lows. Now, if this was to come down and break through that, that's breaking structure. That's going to create a lower low, which that means, it's not in an uptrend anymore. It's going into a downtrend. So it's like, oh, okay. I don't like that because I want it to be an uptrend. So if my stop gets broken, I'm cool. I'm out and I'll wait to see what it does. Yeah, cool. It might come back because sometimes it does. That's all right. I've lost a little bit of money, but I just get back in. It doesn't really matter. And what I've done here, I've put two. You might see it a bit later on, but I put two entries in here. One here where I had a bit of a wider stop, just to let it flow a bit, and then I had another stop up here with another position. Just staggering it really, just play around with my risk. So again, stops. So this was Snap on the other day actually, and my stop was up here. Well, this is shorting, so my stop was up here, and I entered here. The first day I entered, it actually bounced back up, and it was actually quite close to my stop. And then the next day, it started at the 10 daily moving average, and then went down. So I suppose I was looking at it like this: was that I didn't expect, to be honest, when I bought it, I didn't expect it to go up. I thought it was like, cool, it's going down now. But it bounced back up, and why I had my stop there, because a lot of people say, oh, you would have your stop above the structure. But this was, as we'll see a bit later on, it was just because I didn't want to risk any more than what I was risking. So I do that a lot. I don't necessarily always put my stop above where a spike or a dip would be. I just, if I'm timing it right, I can do it just at the risk of my, what my 1% or 2% of my equity, what I want to risk. So to look at your stop as a function of your gains and losses and batting average. So the batting average is the percentage of successful trades, and the gains is the average percentage gains on a selection of trades. And again, the losses, average losses on a selection of trades. So for example, if you've got a 50% batting average, you'll write as many times as you're wrong, which is really good, actually. If you're 50% batting average, it's really good, I think. So to keep a 2-to-1 risk to reward ratio, you need to keep your losses to half your gains. For example, if you make 10% profit, you need to keep your loss at 5%. So this sort of explains it a bit. And just if you've got any questions about it, just give me a shout, eh?
Yeah.
So your 50% batting average, you've got a 10% gain and a 5% loss. That gives us a 2-to-1 risk to reward ratio, which that's really what we're looking for. Anything over 2-to-1 or over is what we're looking for. That means we're going to generate good income, really. If we're 1-to-1, we'll just be break even, which is cool. At least we're not losing. But the idea of this, I suppose, is to increase our wealth. And once we do that, we can do some cool things with it. But if you look at it here, so someone here, he's got a 40% batting average. He makes 15% average gains, and average loss is 5%. So he doesn't get as many right, but he's still making a 2-to-1 because his gains are greater. Does that make sense?
Mm-hmm.
Because think of it this way, there might be someone where you see like me in a minute. I'm around about 30% batting average or 27, but I think my gains, I come out like 5-to-1 because my gains around about 6, 7, about 6. I don't know what I need to work that out actually. I'm making about £6,000 to losing 1,000. So it works out really nice.
Yeah.
It's just playing with these numbers really and knowing what your average gain is and knowing what your average loss is. And the thing you can really control is your gains and losses. You can really control your losses and you can control your gains. It's like, right, I've made 10%. Cool, I'll sell. Rather than being like, I need to make 100%. They're like, no, you don't. It's easy to make 10% and 100 or 200 or 300. Yeah, you can. But
it's interesting, George, to see that you set your stop with what you're prepared to risk rather than above what the trend is maybe doing, if you like.
Yeah, I do. But that's because I'm timing it, eh?
Yeah.
And as you'll see in a minute, we can have our stops wider, but it has to take into account what our what we want to risk. And we'll see that in a minute. It's the most important thing, really, is what the first thing in your mind is what am I risking? It's like, oh, cool, it's that. Right, okay. Then my stop needs to be this. We'll see in a minute. You'll make sense as we go through. So think of this way. So I find this really interesting. So here we've got the gains. Let's say this is loads of different people. You've got someone with a 4% gain all the way down to 100. And you've got 2% loss. And your win to losing ratio is 2-1 all the way down. So someone with a 30% batting average, basically, you're not really going to win. But if it were 2-4, at least you're not going to lose a lot, eh? So you could sort of play around with this if you're going through a bit of a bad patch. You could cut your losses. If you cut your losses right down, then try and get extra gains, maybe 6%. That actually might bring your batting average up to even break even, or it might be slightly over. But if you can bring your batting average up to 40%, either 2-4, you're making 3.63%. If you've got 50% and 2-4, you're still making 10%, which is a lot better than banks, eh? But it's just knowing these numbers and looking at them and being like, oh, it's interesting. But think of this, though, like, okay, if you've got a batting average of 50%, you have to make 48% gains and you're letting stuff go all over the place by 24%, which to get, well, I suppose you can easily let it go 24% if you want, but it's just I would say it's quite hard to get that. Do you know what I mean?
So 24% loss, if you've got, £1,000, you're talking about £240.
Yeah.
Done.
And then obviously you have to be a 50% batting average. It's just quite interesting to look at the numbers, eh? And being like, oh, okay. Because for example, it's quite easy to get 10, 12% gains, or even 14% gains, which is actually really quite easy. Once you dial into it, it's actually really quite easily to get your losses to 2 or 3%. And once you do that, even with a 30% batting average, you start making money then. You can make quite good money.
So, George, that 30%, so even with 14% gain and say 7% loss, you're still negative on 30%.
Yeah.
But on average, you have to be hitting 40% for that to turn positive.
But as I'll show you, it's easy to. This is why losses are really important, because it's easy to actually reduce your losses, and it's quite easy to get the 10, 8 to 12, 14% gains as well. If you can get around that and bring this down to maybe 2, 3, or 4, that's when you can start to get quite nice then. Because you'll see, I cut mine. If things aren't working for me, and I'll show this this will be maybe next week's when we're entering trades and what happens when it goes wrong, this, that, and the other. But I will, if something's not working right, I just cut half of it anyway, because I don't like what it's doing. Doesn't matter, because I can always get back in, but I sort of reduce my risk.
Mm-hmm.
And that's probably why my batting average is quite well down, because if it's not working, I just get out. I don't mind. And sometimes it's done nothing wrong, but I just get out. It's only take a small loss. For me, it's keeping the losses as small as possible.
Mm-hmm.
And not letting anything, and it's knowing have it in mind that when you enter, it should be making if you enter in the right point, it should break out of there, make a higher high, higher low, higher high, higher low, higher low, a higher high, higher low. It should have a structure to it. And it's understanding the structure and understanding what the mean average is. Do you know what I mean? You should have a picture in your head like, right, if this is going to go now, what's it going to do? It's going to break this support. It's going to come down, retest this. It's going to break resistance. Sorry, it's going to come down, retest that resistance. If it's done that and it creates higher highs, higher lows, then it's like, cool, that's doing what I'm doing. If it doesn't do what you expect it to do, then it's like, okay, something might be a bit fishy here. I might sell half and de-risk it, and I can get back in later. Maybe because I've de-risked it, I can move my stop a bit lower just to give it a little bit more room to breathe. And I could even do it in thirds, sell a bit and sell a bit later on and keep moving it down. It might just be because the market's going down. At the minute, you just get out because the market's going fucking down. Just get out. It doesn't look nice.
Mm.
But it's just knowing have it in mind. It's having the plan. Like, what's this going to do? Right, I want it to do that. If it doesn't, cool, I'm going to get out with a small loss. Doesn't matter. At least it's 1,000 paper cuts, eh? Rather than one big fat one that chops your head off. Like, oh, shit.
Got to go to the hospital.
Yeah, get your head sewn back on.
When you're looking at this and you're looking at the gains and the losses, is it like the average gain and loss over a number of trades, or are you looking at this trade by trade? So like, let's say like the 4 and the 2, that's an average?
Yeah, it's all an average, really. So let's say, so I got this from Mark Minervinis, one of his books, really, and that's what brought it all to light for me. So this would be, I use all my stats because it's done on my IG account for me. I used to put into a spreadsheet. It's actually quite good to do it yourself, to put it into a spreadsheet, just to get an idea of how it all works.
Yeah.
So I used to do that, but I don't do it anymore because IG do it for me. But it's because I understand it. But it's really good to understand, and I can send you some examples of spreadsheets that I used to have just to give you an idea of how I did it.
Yeah, that would help me to see it. I think I understand it from a high level, but I think to see the detail, I'd actually really understand it.
Yeah, exactly. Yeah. Exactly. And it's sort of just, because here to be fair, it's quite confusing. I'm looking at it, I'm like, I get it, but it's like, oh, okay.
But just to clarify also, like the 30%, right? You're losing. Those negative numbers are losing, right? Okay.
Yeah. And that's why it's really good to know how you're trading. Like, it's good to know you're trading. It's like, what is my batting average? Oh, I'm only getting 10% of my trades. Well, I'm getting 90%. It's like, oh, cool. But, oh, shit, how big are my gains? It's good to know our gains and losses. Yeah. And because we know, once we know that, we can be like, we can actually look at that and be like, there's something, the market's changed and I'm not, and my strategy is not working anymore. Maybe I just got to sit out. Or maybe I need to learn another strategy to deal with when markets go down. Or maybe I need to learn a different strategy for when the markets go up. But I think what I'm telling you here, what I'm trying to teach you here, my strategy works when it goes up and down. It's just learning that you can make money when it goes down as well as it goes up. Because a lot of people are just like, we can only make money when it goes up. Like, no, you can make it when it goes down as well, which is, for me, is the best part. I love it when it goes down because it goes down quicker. You can make more money when it goes down.
I guess this kind of backs up why the spread betting firms make the money that they do, the big warning sign, because it's all related to these numbers here that you see. So I guess most people don't have a 30% batting average. I mean, you said yourself, George.
And people don't understand that. Look at the risk first and understand the risk and how it works. Because there's two or three things There's 2 or 3 things that we can control. That is when we take a loss. It's when we take a gain. It's how big our stop is, how much we're risking. How big our stop is and how much we're risking is what we can control it. We can't control if the market's going to go up or down, but we've got our parameters that we can control. Mm-hmm. It's getting our head around that and understanding what, as I was saying to you as well, understanding what you want the market to do if it's going to be right. And if it isn't, there should be warning flags. Like if it gaps down, like as I was saying to you the other day, like Bitcoin gapped down a month or so ago, and I was like, fucking hell, I don't want to buy any Bitcoin. It's gapped down. That's a big red signal for me. But I knew people that were buying and like, whew, I wouldn't. It's just knowing what the signals look like as well, really. So I found, when I understood this I found this really interesting. So this is why it's important for a type stop. So if we got a 2% loss to make that back, we basically, it's just over 2% we got to make back. And what have we got here? Let's say 10%. If we lose 10%, we've got to make 11.11% back. When we start going over that, it starts increasing quite considerably. If it goes down 20%, we've got to make 25% back. It goes down to, well, look at this, 34%. If we get 34% loss, we've got to make back 51.52%. If we lose 50%, we've got to make 100% back. That's why keeping these losses, if we can keep them around here, all right, cool, we lose 6%. We've basically got to make about 6% back. So if we can keep it around 2 to 6%, it's making our life a lot easier. That's why, as I keep saying, stop's the most important thing, and just getting them right and play about with them a bit. Remember, it is a game. No one's going to tell you off. Just play about with it, but make sure that what you're risking is what you've is we'll see in a minute. It's basically, I risk about 1% of my equity up to 2.5%. Any more you can really bite into your equity. But just remember that. That's why keeping it around here between 2 and 6% is so important. So,
George, just the 2 to 6%, is that of your equity?
That is just, yeah. Or let me have a look. Yeah, basically. That was it. So yeah, it is. Yeah. Basically, that is 2 to 6% of your equity.
Okay.
Yeah.
But for that one trade, right?
Yeah. Let's say you lose 6% on that one trade of your equity, then you've got to make 6.38% back.
Yeah.
So I guess this is how you stay in the game.
Yeah, exactly. This is how you stay in the game. And as you'll see, like the equity. Oh, I'll show you in a minute. It makes sense. And it makes sense in a minute. So look, I thought I'd just show you what mine is. So in a minute, my win rate is only 27%. So I'm only getting bloody quarter of them right, really. But my average profit is 5,600 and my losses are 992. So I'm keeping my losses minimum, but I'm getting big gains. So you can see I've got some nice big gains here. And you don't necessarily have to have this 50%, 60% win rate. You can. It's just, as I said, I think my win rate comes down a lot because if something's not doing what I like it's doing, I just get out because it doesn't really bother me. But if there's something that's going good, I will put more into it and increase my position on it.
But I guess, like you say, your risk profile enables you to get out if you want without hurting you.
Yeah, exactly. But if it's going well, I'll just get greedy and I'll go big on it.
Mm.
And it's knowing, it's that progressive exposure that we can speak about in a bit. It's knowing when to get out, but actually knowing that, it's doing what I want it to do. All right, I can go big now because there's going to be a lot of buyers coming in.
Oh, so that's like the big gains. I think that people don't want to get out because like they want to make a big gain.
Yeah. But get out if it's not doing what you think. It's not going to make you a big gain. Hey? Yeah. It's but when it is doing what you're expecting, then cool. double up on it, go big on it, because you can always, if it does come back again, you can always scale out of it and sell half and just scale out, so you can reduce your risk again.
Mm-hmm.
It's just playing around with it and being like a game, like a bit like you would on Mario or something. Like, it's just playing around with it a bit and maybe being a bit what's the word? Yeah, just getting a feel for it in a way. I think that's what I've always done with it, just getting a feel for how the market is, what's going on. I always look at, Mark Minervinis says not to do it, but I actually look at the S&P and the NASDAQ as well, because I find them really quite a good indicator of, if they start breaking down what I don't like, I'm like, I get out. And if I was trading cryptos, I would probably look at Bitcoin and Ether quite a lot. Bitcoin, because if Bitcoin's not doing what I'm like, if Bitcoin's not behaving like I would like it to behave, I might not trade a lot of the other cryptos, because everything seems to follow Bitcoin from what I've understood. And it can just be a bit of a benchmark to be like, oh, it's Bitcoin's looking a bit fucking sketchy. I might just sit on the sidelines, or I might, if I'm in a platform where I can short, I'd start shorting stuff because I can make money when it goes down as well.
Mm-hmm.
And I think a lot of people don't like making money when it goes down, but I think I've made the most money going down. It's nice. It goes down really quick. That's cool. And it's just a fucking game. It's just part of the game. If you want to play the game, play all of it. Why not? So yeah, so this was just what I did recently. So this was Tesla. So I was playing around. Well, before everything came down, it had a big spike up, and I was like, oh, I thought it might build something over here and go off again. So I tried to buy it around here, it didn't work. And then it came right back in, and I thought maybe it might come out here. So I bought it here, and I sold it because I didn't like what it was doing. And then I started questioning myself, because it was around about the 5th stage, and it's getting quite, well, look at it. There's lots of red candles going on. There's quite a lot of selling up around here. So then I was like, oh, I have a feeling what was going on up here is they're probably pumping it up, because they might have had positions up around here somewhere. So they're probably pumping it up, then they can sell to bring it back down to, get out when retail investors get in. There's just lots of interesting games going on. But I've always had this trend line in mind going along down here. And then once price, we see it a bit better in a minute, once price went under the 50-day moving average, then a lot of people sell when it gets under the 50-day moving average. So that's why I entered here. But then my stop, as you'll see, was 2.676%, just because of my timing, I suppose. So as I said, I was trying to keep it nice and tight, and just watching price to see what it does. I had a few plays with it around here, but I was just playing, and I suppose even playing around with it gave me a bit of a feel for what was going on with the market. And that was it a bit closer. You can see there's this trend line. So price, I thought potentially it might come up and hit that trend line and come down, but then it just stuck to the 50 daily moving average, and the whole market started to roll over anyway, and it just dropped off then. But it was sort of more on timing as well, really. If you get the timing quite nice, then everything sort of slows down, then it expands as sellers come in, and you can have a quite nice tight stop.
So you got out of this one, or were you wanting it to go down?
No, I was wanting this to go down, because I started to short everything basically. Yeah. The market was going down. I'm like, and it was interesting. I was, just because that has been my intention to have like 100% trading success, and then even from doing the meditations, then my awareness started to come. I seen the universe, if you want to call it that, was just showing me these signs, and I was like, oh yeah, what? Let's short things. I don't know. It just made me see like, oh, I think it might be time to short, and it was really. Everything went down loads. So it worked out quite well. It's getting that feel and seeing the signs as well, eh? Once we get out the fear a bit, and then we can see the signs, everything becomes a bit more clearer.
When you short, I'm trying to get my mind around this. Like when you short, you have stops when it goes up.
Yeah, so that's it. So it's just upside down, eh? Yeah. So if this is why I shorted it. So if price had gone up, hit my stop, I would have got out and just lost some money, basically.
But then it would keep on going up. Keep on going down. So you stayed.
Yeah, so I stayed and made money. But I suppose you think of it in this way. So shorting is good because it goes down really quickly. But the numbers, think of it this way. Once you short, you can only, the maximum you can get is 100%. But when you're going long, like Tesla went up 2,000%, for example. So it can just keep going and going. And so think of it in that way. But
why can you only get 100%?
Oh, because wherever it starts from is basically, it can only go to zero, eh?
Yeah.
Oh, yeah. Okay. Yeah, because I get it. I get it now.
Yeah, you get it? Yeah.
Because that's what you bought it at.
Yeah, exactly. So it can only go, that's the lowest it can go. When it goes the other way, it can keep going forever, in theory. But shorting's really good because, again, I'd explain this a bit more, but if maybe I can show it here. So this was Facebook, and I sort of did this all around the same time. I bought here or shorted here, had my stop here, and it was again 2.95%. But so what you're looking for is around here. There's loads of stops because people who are bought here, they place a stop here. People who bought here, they place a stop here. People who bought here, they place a stop. Same here. So when price goes down, and then goes up a little bit, and then goes down. Basically, all these stops get hit. That's why it goes down really quick. Because all these stops that are placed around here, they all just get stopped and it shoots down. Because basically, I can't remember exactly how the shorting works, but basically, when you're shorting, what is it? Oh, yeah, that's it. No, so when these people are bought, because their stop gets hit, that means they're selling. They're automatically sold, so it all just goes back into the market, and that's what goes down really quick. Does that make sense?
Yeah, because they all at once did it.
Yeah, because exactly, all at once, all these stocks get hit. So the people who are bought, they turns to sell, goes into the market, floods the market, and down it goes, nice and quickly.
Yeah, so the people that have made their money, they've got out.
Yeah.
There's nothing to support it.
Oh, yeah, exactly. There's nothing to support. There's no buyers anymore. There's only sellers, and the stops are sellers, basically, aren't they? But again, this is just to show us that once you time it rightly, and this went down straight, and I go on to the next one. And again, why I was, because I started buying this actually. I was the same as Tesla. I started buying this. When this broke out here, I was like, oh, it's broken out above support. This might, because you had the higher high, higher low, higher high. I was like, oh, it might go up from here. But then it came back in. So I got out, and then it came back under this trend line. So once it came back under this trend line and started to bounce off it, I was like, oh, okay, something going on here. And then you've got so it bounced off. It looks a bit messy, eh? But you got it came off the 200 daily moving average. That's nice when it comes off of that, because that means for me, once it starts going down, the 200 daily moving average, that's a downtrend. Then you got the 50 daily moving average. When price starts going under that, people start to sell. Got the 20 daily moving average, that's going down as well. And then the 10 daily, it's like, yeah, cool. think we're in business now. And then that was for me, when it broke this support line, that was my signal to buy, basically. And my stop was up above here, and the price came down, came up, hit the 10 daily moving average, which you'll find it does a lot. Then it comes straight back down, and then you're in the races. And again, it's just quite nice and tight, basically 3%. That's what I'm saying. I'm trying most of mine, which I didn't even realise. I was looking at this as I was putting this together. I was like, oh, cool. They're all quite nice and tight, which is what I'm looking for, really. And I suppose the more I've played with this and the timing's got better, the stops have got tighter. There's the same sort of deal with Alphabet. That was 2.29%. Same thing there. We had this trend line. It came below it. You had the 50 daily moving average. It came shot down off that, came back up. And that was like that was a retest, really. So you had your higher high, higher low. No, that's wrong. Lower high, lower low, lower high. And I was going to buy it here. Don't know why I didn't, because I wasn't too sure. But then price came down, came back up, and I bought it as it came off that 10 daily moving average, and it went down again. And you can see it's. Then what I'm looking at now is once they go down, then they seem to start making these channels. So I'm going to use this channel to. I'm expecting price to come back up. It's going to hit a channel somewhere, and then I'd short it again to come down. I'm just going to play around with it, really, and means I can come in and out of it and make money as it's going up and down.
Mm-hmm.
Because I'm seeing it more and more. Like the price does seem to like to go in through channels and in sort of waves, and it makes it, if it's going up, it makes it higher high, higher low, higher high, higher low. When it goes down, higher, lower high, lower low, lower high, lower low. I'm just looking for that structure.
In the middle there, like if you go, like there's like a second dip. How did you know it wasn't going all the way down?
That one here?
Back, like if you go back more, like towards the middle of the screen.
Oh, that one? That one.
The one before that one.
That one.
Yeah. The one, you were just there.
Oh, yeah?
Yeah. Like there, it kind of looks like it was doing what it ended up doing when it went all the way down.
Yeah. So what? Probably if I had it a bit out, a bit wide, you would because at that point the 200 daily. I think we went through this last week. Basically, the 200 daily moving average, this yellow line,
mm-hmm.
if that's going up, that's basically still meaning it's in an uptrend.
Mm-hmm.
So when that starts to just start turning as it is now,
yeah,
then for me it's a bit of a signal that and because this was only when everyone started to sell, and it obviously went up a bit more, and the red candles start coming in a bit more. It's you need a bit more of it, as you'll see. It's charts are quite up and down, up and down, up and down. But what you're actually looking for if it was a smooth line would be just rounding off. It rounds off, and then it goes. If that makes sense. Because you've got down here, it does do that. You've got obviously the higher high, then a lower low, lower high, lower low. And then I suppose if you were going to sell this here, you would want, because it did make another lower high, then that, if that came and broke through that and went down, you could try it there. But a lot of the times what I find is, you're also on a trend line here as well, which probably it's quite a bit of a messy chart because I've got all my lines on it. But if you were to look at this further out, you've got this trend line here, and you've got this trend line here. So it's basically making what do they call it? it's basically like a VCP. If we're looking at it, volatility contracts. It goes up, goes down, goes up, contracts, and then once it breaks out of this trend line, for me, I missed it. That was the perfect time to sell it, to be honest. But it came down and it bounced back up, and it was like, oh, cool. It gives you another go. Then there's always, if you miss something, there's always another go to get back in. But if I was really on the ball, this would have been, you could have, if you wanted to be really aggressive, you could sell it here as it hits the 50 daily moving average, sell it again here as it comes out, let it go down, and then wait for it to come out. You could sell it here and let it go, then let it go. It's again, it's playing around, and that is quite hard sometimes because a lot of fear builds. You're like, oh, just get everything going. But I've done it before when I've sold it here, and then here, and it's like, oh, cool. Then it runs. Then.
Do you mean buy because you're shorting, or do you mean sell? Might be confused.
Yeah, because I'm shorting. I mean selling. When I'm talking about shorting, I'm on about selling.
Okay, got it.
When I'm going long, I'm just on about buying.
Yeah.
And when would you move your stop at all, George? I guess that's something I kind of.
Yeah.
I never know when to
move it.
Yeah, so you're not. So instead of your 2% loss, you're having a 0%. You're not. You're breaking even, I guess.
Yeah. So what? There's a few things you can do with your stops. I haven't really covered it in this. I was going to cover it in when we're buying and how we manage our trades and stuff like that. Because obviously, then we can go through that process. But what I would do here, if I had, let's say for example, if I put a trade in here or here, and it's gone down, and then prices come back up, and then gone back down, I would definitely move my stop to break even there because I'm like, oh, I'm safe. It's made its lower low, made its lower high, then gone past it. I can move my stop to break even then because I'm safe.
Yeah, once it's made a lower low and then a lower high, or vice versa.
Yeah, just think of it. You want to see that structure be made, eh?
Yeah.
For me, it's always thinking about the structure because in an uptrend, it's a higher high, higher low. In a downtrend, lower high, lower low.
Yeah, because I guess like your stop gives it like room to breathe. I think sometimes I suffocate my trade before it's had time to demonstrate what it's.
Rather, you mean you put it to break even too early?
Yeah.
Yeah.
Or that's probably because I'm not getting my stop sizes correct.
Yeah.
I probably was making them too tight, and now I think I went the opposite way. I'm making them I'm not making them tight enough recently. So
yeah, okay. And as you'll see in a minute, it's correlating. It does matter how wide your stops are, but it matters how much you're risking. That's the main figure.
Yeah,
you see what I mean.
Yeah, because I probably tend to do it the wrong way around. I look at the stake first.
Yeah.
And then how that fits in, and then I'll maybe wiggle the rules of my stock
your stake
to make my stake fit what I'm wanting it to do or what I think is going to happen, rather than concentrating on the risk. Should then define the stake.
Totally. Because you can, if you've got it right, as I'll show you in a minute, you can.
It's being greedy, basically, I think.
Yeah, being greedy when we don't know it's the right time to be greedy.
Yeah.
And we can. Yeah, it's something we can look at. Well, we'll look at in a bit, but it's knowing when to progressively increase or to scale back. If things aren't working, just go in with a little position.
Yeah.
I think if things are working because the market's good, yeah, we go a bit bigger. But it's also a timing as well, eh? And it's like it's because as I said here, it's like if we timed it here, if I got in here, like perfect time, whoop, winner. That's perfect. And how I look at it as well, once you've got a trend line, especially at the end of a freaking cycle, like 1, 2, 3, 4, usually on the 5th, out. It's not always, but a lot of the time. Near the time, 1, 2, 3, 4, 5, out it comes. the more times you see that resistance trend line, whatever it is, more times you see that get hit, it's gonna go. Because I think, I've heard it before. People say, "Oh no, the more the resistance or support gets hit, it's creating more pressure." But
I guess that's the market's checking that all the buyers are gone, so that they know they can then.
Yeah, exactly. There's no buyers left, eh?
Yeah.
But like people who knew what they're up to, they sold here, eh? And that gives you a bit of a signal. It's like, oh, something's going on here, even though some probably retail investors get back in there because we think it's going to go on forever. And then the other big boys are like, cool, let's make a double top, 1, 2. And then big sellers start coming in, and then they really start coming in.
Mm.
And that's it, just a bit closer. 2 point. Yeah, that's one quite nice and tight, 2.29. And yeah, I think just we were talking about, came out here. It retested basically the 200 daily moving average, came back up. Came off that. Well, there's the support level there, right? If you draw a line for it. It retested that resistance coming through here. Hit them daily moving averages that are coming down as well. So you've got sellers who would be selling off the moving averages, sellers that would be selling off the resistance, and then it just goes, and it goes under the 200 daily moving average, which is nice. I like that because then it's like, oh, cool. That's meaning it's in a downtrend now, eh? So now I can play with it as it goes down. And who knows? I don't know what this rally is going to be like with the markets. It might go frigging mad, and if that's the case, all right, I sold half of it already, and let's see what happens.
I guess as well, there's probably some shares that are, depending on how much equity you have in your account, there's some shares that are probably too expensive to be able to keep your risk profile.
Yeah, depends how much. Yeah, I know what you mean. Yeah, when you've got, yeah, I know what you mean. When your account's quite small, then there's some you have to stay away from. Yeah, but that's cool. Stay away from them then.
Yeah, so I guess that's something. There's always a lure to some of these bigger shares because I guess the gains or losses are bigger, but your risk is bigger, I guess.
Yeah, well, your risk should be the same.
Yes.
So if you can't make a trade without being able to risk what you want to risk, then
so leave it
be, because one day you'll be able to.
Yeah.
You've got to be able to stick to your criteria, and as I said, risk is the most important thing, basically.
I gotta jump back, guys. I just sent you guys a message. Thank you, George.
Oh, cool. Are you coming back on? You got to
I gotta go. Maybe I'll get on from my phone, but I gotta jump in the car, so maybe I can get on from my mobile. But
cool. No worries.
All right. See you next time. Thank you.
Yeah, no worries. See you soon. I'll send you it's gone. I'll send you the things as well. Pardon me.
Yeah. I think I need to, I think maybe one of mine the other day was probably 10%.
Yeah, lost.
Yeah.
Yeah. Yeah, that's cool. But that's cool. Like, just have a spreadsheet and be like, right, what have all my losses been? Then you go, oh, right. Then you can work out the average loss then. Oh, shit, my average loss is 8%. Mm-hmm. So, right, how can I just said, all of mine at the minute, they're all around about 2 to 3, maybe 4%. Well, there's one here, PayPal, so I was up to 5% here. But with PayPal, I was like, I went quite big on this because I was like, this ain't going anywhere at the minute. This was easy peasy. I was like, this ain't going anywhere, is it? I like this because as you've seen it's came down. It's made this bit of a structure here, and it's just hit the 10, 20 daily moving average, and it's just come down with that. And that was my support line here.
Yeah.
As it broke that, I just got in then.
Mm-hmm.
and it rolled over the same time as the whole market, eh? But I think that's one of my biggest stops recently, 5%. There you go. Is it just rolled down, and then I'm going to use this channel to mess around with it because it's come back up. I have a feeling it's going to come back up. That I'd get involved, the 10 daily moving average. So as it comes back up, short it off that and then come down. Because that's what everyone else is doing. So play the game.
That's a daily chart, isn't it?
Yeah.
And what about do you ever hold across the weekend?
Yeah.
Again, I have done in the past. There've been a couple of times I've kind of got my fingers burnt a little bit.
Yeah, I always hold.
Tesla, for instance, if it gaps up unexpectedly or whatever, then
Yeah, but I always hold. Yeah, I always hold for as long as I can, I suppose. Or even I even got out square the other week. I could have held on for more, but I was like, I'm quite happy what I made here. All right, cool. I can leave some for other people. Do you know what I mean? Don't have to be that greedy.
Yeah, I think
being a bit more grateful in a way.
My thoughts were just to, if you're up 10%, just take it and then keep on doing that until it builds up. But then
we can even take half off, sell half. Do you know what I mean? Sell half and let the other half run.
Yeah.
Because you can always get back in if it's doing the higher highs and higher lows, which more likely will do. Or lower highs, lower lows.
Yeah.
So this is when we get into the risk. Basically, this helped me loads when I understood this. So for every trade, only risk. When I first got my head around this, I was only risking 1%. 1% on every trade. So basically between 1 to 2.5%. And this definitely allows you to have like 1,000 paper cuts and you'll still be in the game.
So I guess that's your losses that you're talking about, 1 to 2.5%.
Yeah, so this is of your equity.
Yeah.
So it gives you time to learn.
Yeah.
And it just stops you having big drawdowns. As we spoke about earlier, the big drawdowns takes a lot of time to get your money back. But if you have like a 2% loss, cool, it only takes just over 2% to get it back.
I guess it's quite important because I guess it formulates a structure so that when you are playing with more bigger money, if you slowly build up to, and you aren't doing silly things with larger amounts.
Oh yeah, you could blow your account up even easier with large amounts, eh? Because so at the minute I've got 332,000, and basically gives me 1%. I'm just risking nearly $3,500 each time, basically.
Yeah.
So that's pretty much what I keep to, there or thereabouts. Oh, I might go over, but that's just on the one trade. I might add 2 or 3 or 4 trades at the same time.
Yeah.
Things are going well.
Yeah.
But basically, each trade, that's just what I'm trying to look for, risking.
That's a good
1%.
That's a good thing to actually, because I can look at the equity and then just instantly know what I'm prepared to. Then if the share's too expensive, then I just have to leave it and then find one that has a nice pattern that is within the risk profile. Whereas I think, not just now, but I think there's times in the past where I've just tried to make it fit, if you like, rather than sticking to. I guess it's what happens when you're a novice.
We like to force trades, eh? We want the trade to work, so we force it.
Yeah.
Rather than we all know yourself. If you look back, some of your best trades, they were just easy, eh?
Oh yeah.
That's what we're looking for. It's easy.
I think as well what you mentioned before as well, and understanding where it is in its cycle,
Mm.
whether it's stage 1, stage 5, or some of the things you've been speaking about recently are quite useful for like the latter stages.
Mm.
The shorting and that aspect of it, where everyone's made their money.
Because that's what I was thinking. I've been looking at all these stocks recently. I'm looking at everything's in a 4 or 5 stage. I'm like,
Mm-hmm.
well, that's not going to go any higher, then, is it?
Mm-hmm.
There's part of my mind was my novice part, or my greedy part was like, yeah, it might do. All right, let's have a trade on Tesla or this or that. But if you're actually being sensible and being like, it's not going to go any higher. And it didn't, because it's so important to look at the stocks and know the stages. Once you know that, there's all these little indicators which are like, cool, might be time for shorting. And that something that really explained it to me recently, or indicate was like, well, I've made my best money shorting recently. Why am I going to go long? Doesn't make no sense.
Mm-hmm.
Then I was
almost.
like, I think I'm going to start shorting everything. And then I did. And it all went the right way.
I mean, I guess in a lot of aspects, it's, if they've been going up and up and up forever, or what, it's not possible for them to keep on doing that. I guess it's recognizing when it's going away into distribution or accumulation, or what's.
Yeah, and just knowing that, well, the market's been going up for freaking nearly 2 years. It's got to have a bit of a nice. Something's fucking. Tell you what, something's going on underneath somewhere. Hey, I've been saying it for ages. It's a game. The people with the money, they already know the game. You just got to have to be aware that at some point it's going to go down shitloads, basically.
Yeah.
And it's just being prepared for it and understanding that, yeah, it's not going to go up forever. It's going to go down. And if shit does going down, my stops get hit. Cool. At least I'm out and I've got the emotions are gone. If I'm in and I've got no stops, fuck. Feel those emotions.
Yeah.
It's going to be hurting. But yeah, so think it this way, looking at your equity, you're risking your 1% of equity at risk is the most important thing. That helped me loads when I first got my head around that. I was like, that makes so much sense. It just helps you having a big drawdowns and stopping you blowing up your account.
Mm-hmm.
I think you'll see it'll be nice. So I do this. This is how I use it. So when I'm making a trade, I look at this number because I know my risk is 3.3. So okay, 3.8 here.
Yeah.
But that's how I adjust my size. And I also look at this. I'm like, well, where am I going to put I always use a measuring tool. I'm like, well, this is what I'm going to enter. Where's my stop going to go? Oh, and for here that's wrong. Is that wrong? It might be a bit wrong. Anyway, so I was like, my stop's going to go here. So I put my, whatever that is, 483, 486, I put in here, and that gives me my risk because I know already what my risk is. And I just play around with the size so I get the right risk.
Yeah.
That's how I do it, really. As you said, you'll probably do it now. Once you've got this size in mind,
yeah,
you just look at that and play around with that to suit. And also your stop, you like, if you've timed it right and you think it's just going to go straight down, yeah, you can have your stop nice and tight. If you think I might be a bit slobby here, all right, have your stop a bit wider, but as long as that number's good.
Yeah, so I guess you can always reduce your stake.
Yeah.
Or keep your risk. Yeah, okay.
This is the main number, You're 1%, especially at the start till we get our head around it a bit more. Start at the 1%. Once we get our head around it a bit more, then we can go a bit.
And so the cursor, the blue rectangle, what were you doing with that again? Sorry, George.
Oh, this?
Yeah.
So this is the measure. I don't know if you used it much. That's like a measuring tool on IG. So you can use that. So to just, you click here and then go up here and that'll tell you, oh, that's 2%. So I'm like, oh, okay. That's a 2% stock then. All right.
2% of your equity or whatever it is.
Or that's just a 2% of the price.
Right. Sorry, got you.
Yeah. Because then you can do your, because at the end of the day, think of it this way. Even if you're using 5% stock, 5% of the price stock, then you need to give it a little bit of room to fluctuate, eh?
Yeah.
And if, let's say, for example, I looked at this and we're like, well, I know prices hit the 200 daily moving average.
Mm-hmm.
So I want to put my stop up here. Right, I'm gonna sell it now. I would measure that and be like, right, that's 4 or 5%. I might be like, I want my stop to be tighter, so I want it to be 2.5%. So I would bring that down to 2.5% maybe, and be like, that's what I'm going to give myself, 2.5%.
Yeah.
And then I can just put that number in, 483, put that in here, and that will give me my number. Depending on if I think I've timed it right, I can just make this big.
Mm-hmm. And are you generally setting your stops on the daily trends or?
Yeah, basically.
Yeah, okay.
If I was doing intraday, maybe I could do it. I would do it off the intraday 2-hour charts or something. But I do the stops basically off the 4-hour. But I mean daily.
Yeah, okay.
I like I said last week, I look at the 4, 2, and 5 minutes sometimes and just see what's going on.
Yeah, to get a feel for.
Yeah.
But yeah, I guess like I think I read the other day is like it takes time for sudden move, like for a share to turn direction, doesn't it? So I guess generally sticking with the trend is your friend, isn't it?
Yeah, exactly. And as you said, it does. As you've seen there with like Alphabet or something, it's taken a month, 2 months for it to really start moving around.
Mm-hmm.
If you got your eye on it and you start drawing your trend lines, you're like, oh, I see what's going on here. And you just got to chill and let it come to you. It's not always easy because we want to make a trade. It's exciting when we make trades. When we first start, eh?
Oh, it is, yeah, definitely.
Because there's all the stuff going on around the money. But once we can lose that, lose all the stuff going on around money as much as we can. There's always a bit going on. There's stuff going on for me. I know there's stuff I probably need to clear, but it makes it easier. It's like it made it so much easier for me to chill now and be like, oh, just let it come to me.
Yeah, yesterday, like the markets, they moved quite considerably down. So I was short in a couple of positions, but then I guess they came. I didn't expect them to come up quite as bounce back up like they did the same day.
Mm-hmm. Yeah, and that's for me. I wouldn't. I heard people as well, like when Coinbase had gone down, I don't know, gone down 12, 13% on Friday, whatever it was. And then someone was saying to people in the group, like, yeah, Monday in pre-market, just short it. I'm like, but it makes no sense because your stock should be 12% above where it's like, you're telling people the wrong stuff, eh?
Mm-hmm.
Don't chase it. With the market going down loads like that, for me, there's like, yeah, it's going to come back at some point.
I should have moved my stop.
Yeah, especially if you're right. So what I would have done if I had shorted something on a day like that, if I broke it, I would. To be fair, I would have got out that day.
Yeah.
If things started turning, I'd be like, oh, I'm out. Or just move my stop to break even and be like, don't matter.
Chill. Yeah.
That's all right. It's just part of. Because I used to do that. If stuff had gone down, I'm like, it's going to keep going, so I'd short it. But it's like, if you've missed a big move to begin with, just wait for it to come back up and make. Because the indices does the same as stocks, eh? If the indices gone down loads, then it's going to make that lower low. So it's got to make a lower high. Wait for whatever. If it's gone down loads, just wait for it to make a lower high. That's the time to short it then.
Yeah. Mm-hmm. Yeah, I think I'm not so bad at over trading now, I don't think, whereas I used to maybe do a bit too much. So I think it's interesting. It's really helpful today, like how you're managing your stops, and it's all governed by your risk.
Yeah.
I guess I was kind of new about it, but I was kind of maybe not. It was that Mark Minervinis table you put up, and it's quite apparent that unless you're managing your risk, you might get lucky and make quite a bit, but then before you know it, you'll be either back to break even or wiped out if you don't manage your.
Easily get back to break even. Yeah. Because I did it so many times.
Mm-hmm.
This year, looking after that risk and just playing around with that 1% to begin with, and playing around and figuring out our stops and the entry points and it is there's a lot going on when you've got the mean averages up there. You've got all these trend lines and support and resistance lines. There's a bit going on, but once you get your head around it and your mind's used to looking at that, you sort of know you should know what price is going to do. Because there's quite a few figures. Like as we were talking earlier, you've got there's been 4 or 5 stages. That's one indicator. The 200 daily moving average starts rolling over. That's another indicator. Price actually as well has started rolling.
Yeah.
The trend line has broke, or it's just about to break. There's been 4 or 5 tests of a trend line or support line. It's like, okay, or resistance line. No, something could go here.
And I guess, as you mentioned in a couple of slides before, even if you've got in before you put your short, you've thought it's maybe a couple of times you've maybe longed it or put in thinking it might break out. I guess it's that I guess sometimes that's where it's not worked out, so I'll leave it. But I guess sometimes persevering.
Yeah, I was just getting a feel for the market, and that's helping me get a feel for the market in a way. And also, as well, I'm not attached. With all the work I've been doing, I've let go of a lot of attachment. Mm-hmm. So if it goes against me, it doesn't bother me anymore.
Yeah.
All right, there's a little bit under there for sure, but not as much as it used to. Mm-hmm. If it didn't work, I would fucking hell. I would have a right old moan. But now it's like, something's going on here. It's not doing what I thought it was going to do in that direction. Oh, maybe it's going to go down. And then wait for it to go below that trend line. And then it stays below the trend line. And you're like, okay, I think it's going downtown.
Nice one.
It's just waiting to see, eh? Just waiting for it to all play out, because it does play out in the end, and it plays out the same. The way it plays out is pretty much the same every time, as you've seen by those examples.
Yeah.
Oh. I was just showing it again, just how I was playing around with it. So this was gold at the minute. So gold's quite an interesting one. Again, I'm sticking to my 1%, but to have I'm sure that's different. I'm feeling I might be wrong here. I think no, it is right. It is right. So there we go. Yeah, no, this is right. So to have around about the 1%, I've gone 3,000 here. So I've got a size of 180 and the stop 17. So I entered up here. That's the spread. Yeah. And there's my stop down here.
Mm-hmm. Yeah, so it's very... you're being very rigid, aren't you? And it's good you're applying...
Yeah, and my stops... And you obviously understand why my stops below here, because that's the higher high, higher low, higher high, higher low. Mm-hmm. I'm expecting it to break out of here now.
Where's your stop there? Oh, yeah, got you.
It's down here.
Yeah.
Because it's come up, it's tested that.
Mm-hmm.
It's finding supporters. So I'm like, okay, maybe I'll do another one. Because I bought it twice here. I bought it one here. And because I have a feeling, because inflation, everything, gold's quite a nice inflation one. I've already put an order in. If it goes out while we're speaking, I'll buy it when it goes up here again. And I'll show you what I'll do in a minute. But if it goes up, comes back down, I'll buy it again, buy it up here. Is how I'm going to try and make a big position in it. Because I'm finding gold's quite hard to make a big position in. Because I'm trying to make a 25% position on it, but it's quite hard to make.
Okay. That's something I've never done. I've never done like an order or an alert or used a trailing stop.
Now, to be fair, I've never had much success with orders. But I've never used a trailing stop neither. I'm doing it by feel now. I'm like, oh, okay, that's time to get out. Or if I've made 10, 12%, I'm like, I sell half and let the other half run.
Yeah. If you make about 10 or 20%.
Yeah, and if I've let something run for a long time, it goes below the 50 daily moving average, probably get out of it then. Like I said, the 50 daily moving average is quite a good signaler actually for getting out, or especially for shorting. I'm finding that a lot recently because I've been shorting a lot. That once price goes below the 50, it's like, cool, all right. Well, I think we're in business now.
Yeah. Okay.
And this was just showing. So that was it. If I go back to that last one quickly. So this was a tight stop at like not even 1%. So I had a nice big high size of like 16,000 margin. So I was like, cool, I can make a big position. That gives me the 3,000, which is near my 1%.
Yeah.
So then if I go to this one, I'm like, wow, I want to let it run a bit further. I think that's quite tight. So I want to let it run down to under this low here.
Yeah.
But I've still stuck with basically 1%, 3,600. I've got 100.
Yeah, so just reduced your stake.
Just reduced my stake, yeah. And made my stock, made me stock bigger, but I reduced my stake. So that's all. But we're trying to just keep that figure in mind, eh? That's the main. Yeah. That's the main one.
And so, would you do that? Is that quite normal for you to do? Like, have like a tight, and then a more of a breathable kind of. Should it not work out to your original tight plan?
Yeah, I did. Yeah, I sort of play around because I have done that on this. So you'll see in a minute actually because I put gold in a bit later. I'll explain it to you. But I've got two positions here, and I've basically got one stop here and one stop down here. One just to let it breathe a bit more, but I don't think it's going to go down there because it's going to hit. Mm-hmm. It's going to hit that, and if it does, then something's not right, and I'll probably get out before it hits that anyway. It's just. But making sure that's the main thing. Playing around with that, making sure that risk is 1%. Yeah. Then we can play around with these numbers just to suit. And be interested just try and be interested in the thoughts that come into your mind as well when you're actually doing that. Because it might be something making you want to do something else. And just be wary of that and be like, where's that coming from then?
I think it's becoming impatient and trying to force some stuff rather than
and I've only said from my experiences there'd be something nice and deep under that, because what is it that's wanting you to force it,
Mm-hmm.
But that's cool. We get to the psychology part later on, but just have it in mind. It's like just ask bigger questions of yourself and be like, what the fuck is it that's making me be impatient? What do you know what I mean? Because it's slightly more complex than we think. It's interesting.
Yeah.
But we can play around with that. That's when it gets fun. Oh, position sizing. So that's all about stops. Now on to position sizing.
Oh, cool.
So basically the optimum position size of your account, whatever your equity is 20 to 25%. And that is, again, like I think we obviously just going on about stops, but never have stops greater than 10% and aim below 5%, and never take a position over larger than 50%, as it just gets. It becomes. Think of it this way: if we've got a huge big position, it's hard. It can be quite hard to sell.
Yeah.
So it's even, to be fair, 20-25% position, they're big anyway. And it's actually, as I'll show you in a minute, especially with spread betting, it's actually quite hard to keeping your risk at manageable level to create that size of position.
Yeah, so you could have 4 positions or 5 positions for your first bullet.
Yeah. As I've done here, so even for that 25%, I've got 4 positions here, 4 stocks maybe, or even 2 stocks or 1 stock.
Oh no, what I mean is, like, you could have, say you've got 100% in your account, you could have 4 at 25% each. So you're using up your margin.
Yeah, and that would give you 100% fully invested. But that's using your margin. Basically, that's basically using margin, and that's what I'd try and do really. When I'd try and make a 25% stake, that's 25% in margin included, which is quite hard to build, but it's quite fun trying to do it and working out how can I do it but looking after the risk at the same time.
I've read a few things that say not to use margin, or I can't get away from it just now.
Yeah, but if you look after your risk, like we were talking about, if you're 1%, margin's easy.
Mm-hmm.
If you're not looking after your risk, margin can bite you in the arse there. Mm-hmm. But it's looking after that risk. Once you look after that properly, margin's easy. Because it doesn't make no odds. You're just risking 1% of your equity. It doesn't make no odds then.
Yeah.
And what I found as well is, because I used to have, at one point, I would have 15, 16, maybe 20 stocks going on. And I'm like, that would drive me bonkers. To be honest, even having 10 to 12 stocks, I think that's a lot. I go really quite concentrated now, maybe 6, maybe 8 at most.
I think the most I've ever had is probably 3 or 4.
No, that's all right. Yeah. You're quite concentrated anyway. Mm. Oh, yeah, no, at some point I had like shitloads going on. Some probably weird belief going on there. But no, I'm like the most I'll probably have 6 or 7, I think, maybe 8 going on. Then it's like it doesn't get too hectic in your mind then. You can manage it quite easy.
Yeah.
So
I think that's Dave Lamb.
There's Lambo in here?
Yeah, he's not in, but he's on the WhatsApp there.
Ah. So think of this: if you've got 100,000 portfolio, and again, this is looking at our risk, and pretty much what we were speaking about the position sizes. So this is the Mark Minervinis thing, the basically 1.25, but it all sort of makes sense when you look at 12.5% position sizes, because obviously a quarter is 25%, so half of that is 12.5. So to make these numbers work, he uses 1.25 rather than the 1%. But do you know what I mean? It's the same thing, really. So if we look at it, if you've got 1.25% risk of total equity using a 10% stock, for a 12.5% position, you got 1.25% equals £1,250. 12.5% position of 100,000, 12.5 grand. And obviously to get we're using a 10% stock, That would give you 1,250. These figures are probably more around if you're in a ISA. Do you know what I mean? Or you're actually buying stocks. Slightly different for spread betting, but it still has the same effect that we're just looking after to create this position size. If we want to create a position size, we have to reduce our stop. With a 12.5% position, we've got quite a big stop of 10% if we want to stick to that.
Oh, that's a 10% stop.
Yeah. Do you see what I mean? Because this is if you're buying stocks and it costs 12,500 to buy that amount of stocks, then if you're 10% stop, if you're looking at buying shares, actual shares, do you know what I mean? Because spread betting, it works slightly different because it's pound a point, isn't it?
Mm-hmm.
But it has the same effect that you're just reducing your stop.
So what have you got there? 10% stop, 5% stop, and then
2.5% stop.
But you've kept the same risk.
Yeah, or think of it this way. For a 12.5% position, we're going to risk £1,250 and we've got a 10% stop. But to have the same risk with a 25% position, we have to reduce our stop to 5%.
Okay.
And with a 50% position, to keep our risk the same, we reduce our stop to 2.5%. It's all about keeping that number the same, the risk.
Yeah.
Risk of our equity. That is that's the most important part, the risk and the equity. Then we can just tighten our stop or increase our position size to play around with it. But as long as we keep that right, that keeps us in the game. So this is how I'm trying to build a 25% position, if possible, in gold. This is what I'm playing around with at the minute. So 2 days ago, 2 days ago, 1, 2, 3, 4, 5, 6. So last week, price broke up around here. So I bought in here. I bought in twice. And I first put one stop down here because I wanted it a bit away from that trend line. Then I've just put another one in here. So the first position, the risk, so that was 2.86% down to here. Yeah. And that gave me £3,000 risk. So that was that's obviously in my risk profile. Yeah. And then I just had one a bit tighter. Yeah, it's not as, I could have gone bigger, I suppose, but I just kept it the same. With a bit of a smaller risk. And I just put one in today, just with the stop below here. Again, I could have gone bigger, but I just kept it the same. But I'm just sort of trying to show you this is how I'm trying to build a big position. I'm going for the higher highs, higher lows. That's in my mind. If it breaks out of here, and with these three positions, I'm only at 5% at the minute. It's just how it seems to be how gold's working and where I want my stops to go. It's been slight. I don't know. Maybe I could have gone a bit higher up here. I could have maybe doubled that, but I'm sort of trying to look after my risk as well as trying to build a sizable size in it, sizable position. So what I'm expecting, I can buy it again as it breaks out of this trend line. We've got resistance up here. So I would assume price is going to hit resistance, come back down. Once it's tested that and starts turning around, then I would buy it again and put my stop below here. And then as it breaks out, I would buy again as it breaks out here.
Yeah.
And then once this has all happened, once price is broken up here, I would I would move my stops to break even down here, especially if price has gone up here and we tested that and gone up. I'm like, I'm safe then, eh? Then I've made those to stop break even. Once price breaks out of here, that would go to break even. Then I would just be off then.
Yeah, okay. And see, like, your 25% position, is that looking at your, so I guess you'll have like a number of different trades. Is that 25% of, that's not 25% of your whole equity, is it?
Yeah. So that's
No,
20.
it is. Yeah, okay.
Yeah. I have got, oh, here you go. Yeah, so that's, let me go back to that. So yeah, basically it's 25% of my whole equity.
Right.
So that's how I'm looking at it. It's, as you'll see, when especially because we probably got margin involved with it, that when you're looking after your risk, it's actually quite hard to build up to 25%. That's what sometimes I can. It's depending if I'm feeling risky or not. But I'm just playing around with this to see, like, is this? Yeah, I'm just playing around with this to try and build it up as it's moving.
And would you shut down a lot of your other spread bets to like bank that equity to allow you to do that, or would you just let them flow?
No, because I suppose I've got the equity to play around with it at the minute, really.
Yeah.
And the margin lets you do that, eh?
Yeah.
Because as you'll see in a minute, I'm not because I took some profit off the other day. I'm not fully invested at the minute.
Yeah.
But yeah, that's how I'm playing around with it. And so this is I've got a spreadsheet. I can forward it over to you, eh?
Yeah, okay.
It might make a bit of sense. So up here, I have my equity and profits, whatever they are at the minute. Then this is what I'm risking.
Yeah.
So when I bought something, I always put in the margin, or what it costs to buy it. The margin, what it costs. So if Alphabet, it's 26,000. Whatever I'm thinking about 0.5 or 0. Basically 50p a point.
Okay.
And that's in a minute. That's giving me £26,000 worth of margin. But I always add that up as well. I'm always intrigued to know what exposure that is.
Where's that tell you that?
If I go back one or two, it will show. I'll show you. There you go. Down here.
Oh yeah, got you. Yeah. So that's where you're taking that deposit. Yeah, got you.
Yeah, so that tells you down there. And so I'm always intrigued what the exposure is, because it's 5 to 1 what we get as retail traders. So if I've got 26 grand on that, I've got 100. I'm basically buying 130 grand's worth of shares or selling it, whatever I'm doing, which I quite like that. So that's interesting. Once you realise how fully invested you are, so at the minute I'm about £616,000. I'm like, oh, that's cool. I haven't even got that. That's why I love. That's why I love margin, because if you look after your risk tightly, you can use their margin to your gains. If you're sloppy with it, yeah, it hurt you. You can lose a lot of money. But if you're disciplined and you understand, if you look after it, then yeah, it's really good. Oh, wrong one. And I always put my risk in here. So Alphabet and Tesla at the minute, I've put them to break even. I've still got risk in some PayPal, Meta, Facebook, Snap-on, Gold, Copper. That's my overall risk I've got at the minute.
Right.
So about 6% of equity.
Okay.
And then in here, so this is what I use for my position sizes. So I use this to work out the size of my positions, what I need to put in. So at the minute, I would need 83,000 to build a 25% position, which is quite a lot. This has been growing quite a lot recently. I think before I sold Alphabet, I had that at £1 a point, which was, let's say, 50,000. So I would have needed to go on 1.5 to get that. But then my risk, I wouldn't have been able to do that in one trade. I would probably have to do that in 2 or 3 trades. Probably 2 trades. I could have built it up, actually. But yeah, I wasn't able to. So again, it's making sure you keep hold of that risk. The risk is the most important thing. Then you can play around with, right, if I want to build a position side, right, I'm going to have to buy it here, and here, or sell it here, and here to actually create the size I want. So once I've worked out this, and this obviously changes, as this changes, then I use these figures from over here, put it in here. That's nearly 25%, 22.57. So Alphabet is about 8% at the minute. PayPal 5%, Tesla's only 2.75%, Meta 7%. So yeah, that gives me the idea of the sizes of my stakes I'm putting in. Same with this one.
Quarter 2. So that's how much you've got tied up in. So it's 100, what did you say? 100. So what have you got tied up then? Is that 166? Is it?
Hit this one here. Oh, up here you mean? Or
all right.
No, that's just if I wanted to make a half position, I would need to make it 166,000. But it's quite hard, eh? You'll find once you got your risk sorted and you start playing with position sizes. There's a bit of a game to try and create a position size, and it becomes if you put your focus on it too much, you sort of start to forget about the risk. So the risk is the most important thing, really. But it's just playing, and it's looking at the way I found to do it, to be able to create my position sizes using the higher highs and higher lows and buying it at the right time.
Mm-hmm. Yeah, so you're putting quarter of your equity into gold.
I'm trying to, that's the name of the game, because I'm like, I think gold's going to go quite nice.
Mm-hmm.
But if I try and make it as big as I can, but I try and, like I said, I found that when I try and put too much emphasis on that, I usually lose.
Yeah.
So it's just making sure you look after the risk when you do.
So there are quite a few shares where you've built up. I know you have on Tesla, and built up a bit of a had various positions and built a.
And what I'm trying to do now is do it early, because in Tesla I did it over time. But if you can make a nice position and then it goes up 10, 12%, you don't need 100% gains.
Mm-hmm.
Because that, like I said before, because you've made a big position size, that's basically making a 10% gain into a 50% gain. Does that make sense?
Yeah, okay.
Because you've gone in big, and then you can scale out of it, but you might make as much as you would have making 40, 50%.
Yeah, okay.
But yeah, if you think it's going to be a Tesla or something like that, sell half and just keep doing it over time. But if you can create a 25% position to begin with, it goes up 10, 15, 20, 30%, sell half, you've made a good profit, and it goes down, but then you buy it again and you put another 25% position in, and then it goes up and you sell half of it, 12.5%, then you've got a 25% position that's actually really safe, and you can just let it run then.
Yeah, okay.
And you've made money on it as well.
Yeah, okay. I think did I read that in Mark? Is that Mark Minervinis?
Yeah, he talks about that. It's just understanding and getting in and out of it. And again, we can play around with that when I get into actually entering trades and what we do to scale in, scale out, or scaling out really, and how we take profits. And if things go against us. So yeah, I'll send this sheet over to you because it's
okay, cool.
really handy, yeah.
Mm-hmm.
And then the progressive exposure, which is quite simple. It's sort of what we've been talking about. It's really good to understand your trading and know your batting average.
Mm-hmm.
And IG will probably tell you that. You'll be like, oh, I might be at 10, 20, 30%. But you can either just look at your last 15 to 20 trades and work that out. But if you were, maybe you might have been at 50%, then all of a sudden you've gone down to 30%. Then that's telling you something that, oh, maybe the market's changed, or maybe there's something going on mentally, and we just need to take a break and have a stock and try and understand what has been going on. Maybe it's we need to start shorting rather than going long, or
But I'm, I quite enjoy. I've done both, and I quite enjoy shorting whenever I have done it.
No, they both work well, eh?
Yeah, I think I don't really care. I don't really pay attention to the news. I can't be bothered with it really. Or if I hear something, it's like, okay, that's fine. That's what they're trying to force the layman to go and do something. So it's like, well, it's time to sell if they're telling you to buy, or vice versa, or whatever.
Definitely. We don't need to look at it's all news is built into the stocks. We don't need to look at anything. It gives us more time to do what we want to do, doesn't it?
Yeah. So,
and with the progressive exposure, how it sort of works really, if before you go into the market, you don't need to go in with a huge big position size. Just go in and test, put a toe in and like test.
Yeah.
Maybe it might be a little 2.5% position and just see if you get any traction. And once you do see that the market's working and you're getting traction, then you can maybe ramp it up a bit and maybe put a 12.5% in, or maybe a 25%, and see what happens. Yeah. And if it works, then yeah, cool, put some more in. But if it doesn't, then scale back and be like, oh, something's not working here.
Yeah. So that, I guess yesterday, what I did put in quite a small position to begin with, which was, I guess it's quite good for me. So I wasn't utilizing what I could, so I was concentrating on just going in smaller just to see what happens, which normally I probably wouldn't. I'd probably just go in with the size but I did go small, and then I did get in a little bit bigger because I could see it was, it was falling quite significantly. But then I think I had my stop too wide. I don't think I calculated it as such. I'd just done it on where, looking at the charts and above the highest high or whatever it was, and that maybe didn't reflect, and so it probably was about, maybe it's probably way too high. It's probably 5 times higher than what I should have been.
Yeah. That's when that measuring tool is really handy, eh?
Yeah, I need to maybe use that.
Yeah, once I found out, I was like, oh, that makes it easy. Like I said, if I don't want my stocks to be anywhere over 5-6%, I'm looking round about, as you've seen, mine are around about 3%, 4% really. So if it is over, you're like, oh, maybe it's the wrong time. Or if it was something like yesterday, maybe look at it at a 2-hour chart and be like, well, I'm just going to do this for the day.
Yeah.
It's already gone down loads. It's like, might go down loads, but don't be surprised there's going to be a bounce.
Mm-hmm. Yeah.
That's why I sold, I think. I don't know. So I was like, I have a feeling there's going to be a bounce or something. So I did, and it came back up. That was cool. That was handy.
Yeah, because I guess what I should have done was, if I knew that I didn't have time to dedicate to just observing what was going on, I should have had my stops at break even, and then I could have shifted them back. Well, no, that's maybe you shouldn't be shifting your stops, really.
No, but as long,
I guess it was an unusual day yesterday, and that fact it was, it was quite a significant drop, wasn't it?
yeah, it was. But I think, like I said to you, I wouldn't be trading on the daily chart yesterday.
You wouldn't?
No, it was too. It's already gone down loads. I would have waited for it to rise, as I'm doing. So I'm waiting it to rise now, and then I'll sell, and we get the new lower high.
Yeah, so you're waiting on a
Think of it this way: it's more likely
high.
FOMO got you to make a trade yesterday. Eh?
Yeah. I guess maybe what it was, I was maybe looking for shorts specifically, and I guess that a lot of these had already broken out, but I maybe wasn't early enough in like some of your slides have shown previously. It was almost okay. It was a great move yesterday, but I didn't take advantage of that. But it was too late, probably. I should have been a little bit earlier.
Because a lot of the moves had already been done, really.
Yeah.
2 or 3 days before, to be honest.
Yeah. So I guess that's...
Yeah, but if you see that, then try and just let it come back. Because in 2 or 3 or 4 days' time, maybe a week, it'll be back. And then it will be retesting resistance. Because support got broken, then it's like now look for the places where support got broken and where price will be retesting it into resistance. So where it's retesting into resistance, that'll be the place to sell again then.
Yeah.
And it might touch it 1, 2, and it will probably coincide with some mean averages as well.
Yeah, you mentioned that like you use a 50 DMA as quite
yeah, but when price has broken quite a lot, like it has done then, you'll find that price will stick to the 10 or 20 daily moving average.
Mm-hmm.
The 50 daily moving average to begin with when price tightens up. But after that, as it has broken, then it's like an uptrend, really. When an uptrend, price seems to stick to a 10, 20 daily moving average.
Okay.
And especially the first retest, it will be in conjunction with resistance and a moving average. Because you've got 2 sets of buyers. You've got 2 sets of buyers or sellers that are selling at the mean average. Or you've got buyers or sellers that will sell at the support resistance line. Because think of it in this way, the people that bought yesterday drove prices back up, they're going to be looking to get out they're going to be looking, even the bots as well, they're going to be looking, be like, right, where can I take some profit? The profit will be even a support or resistance line or a trend line, if it's a trend line, or a mean average. Do you see what I mean?
I can go back a slide.
You want me to show it?
Yeah, sorry, I'm kind of...
No, that's right. So let's do one of these shorts. That's a good one.
Yeah.
Yeah, this is what I've got in mind for Alphabet, for example. So Alphabet, it's come down loads, and so there's a few places. So it obviously bumped up a bit from yesterday. So there's a few places I'm looking at. I'm looking at this channel, and I've got this 10 daily moving average in mind, yeah, here.
Okay.
So if this 10 daily moving average sticks along with this channel, which I have a feeling it will, price is, people started buying. Well, first of all, people sold it here, shorted it, came all the way down, and it's come down here. Then at some point, as you see, this corresponds to some support line over here.
Yeah.
They know that. The algorithms know that. So once it gets down here, they'll be looking to get out. They've made some money, eh? So then once the short gets out, that means they've got to buy back in the market. So price goes up. So price will go up. I have a feeling it's going to be around about this level, this support, this resistance line. Well, you've got a nice resistance line above it here. So don't be surprised if it comes up to maybe up to here. Or it could, even if there's a big rally, might come back up to near where I bought, up around here. So it depends how big the rally goes. But I've now financed my stop in a way because what was that? At one point, so that was 13. So I took about £13,000 profit on that.
Yeah.
So that means my stop here was, I think it's around about, I think for this maybe like 3,000 or 4,000. So I've actually, even if price goes back up, hits my stop, I've still made money. But I'm looking now, because it's started in a downtrend. All I'm looking for now is for this to make a lower high.
Yeah.
Which, to be honest, that was a lower low. That was a lower low. That's a lower high. That's a lower low. So price was more likely going to come and hit that somewhere. I think that is probably going to be the.
Yeah.
I think it's going to be somewhere around there. So this might come down at that point as well. So don't be surprised if it comes up around here, and then I'll look at shorting it again as it comes up here.
Mm-hmm.
I wouldn't have shorted it yesterday just because I know there's already been a big move.
Yeah. Yeah, no, you're right. I guess it was.
But like I said, if we're doing it off the intraday charts, it's cool. Because if you look at the 2-hour charts, you'll still get your higher highs, higher lows, higher highs, higher lows, or lower lows, lower highs. So you've got your structure. You can look at your structure. It's all about the structure, really, and understanding that, it's doing it's going in an uptrend now because of that, or it's going in a downtrend now because it's keeping the same structure.
Yeah. So I guess it's, like you say, getting in early enough. Even if you get it, or even if I was to get it in the wrong direction, because it doesn't do what I think it was doing, and then, say you get out and then just observe it for the next little while to see what it's doing.
And it's knowing that this is what you should be looking for.
Yeah.
Do you know what I mean?
Mm-hmm.
That's what I'm looking for, these VCPs. Same with gold at the minute, that VCP, that's like, I'm all over that.
Mm-hmm.
This is what we need to look for, these VCPs. Because as you see, this is when the big sales come in. Boom, straight down, you're in profit straight away, eh?
Yeah, because I guess what they're wanting to do here is, or the market makers or whoever it is they're checking that there's no, like towards the end, that there's no buyers left.
Well, it's just run out of buyers. It's the end of the market, isn't it?
Yeah.
Yeah.
Before they go, right.
Well, it's big institutions. You have to think, all this selling is big institutions. Just have a think what are the big institutions doing? Well, they've made their money, eh? It's been
I guess they've already sold way on the left.
Well, think of it in this way. But they haven't sold. They've got a lot of money. Like big institutions can't get out in one sell. They have to put it over and over and over and over again. So it takes time for big institutions to get out.
Mm-hmm.
So, and it's the same with when it goes up, eh? This is big institutions selling here, selling here, selling here. And then when this is when stops. Why it goes so fast is because stops start to get hit.
Mm-hmm.
And it's the same, if you turn that on its head, it's the same as when price goes up, because big institutions are buying. And then when it gets above the old highs, and there's no one to sell above that, so it just keeps going up. Mm-hmm. And the same here. There's no one to buy as it goes down here, so it keeps going down.
Mm-hmm.
Then it starts hitting stops, and it goes down further, so it's more stops. It's just try and think, what do you think the big institutions are doing there? And it takes them time to get out, because they might have like, I don't know, 100, 200, might have billions in there, right? They can't put that into the market all at one time.
Mm-hmm.
It has to be over a period of time. That's why actually retail investors like us is really good. We can get out straight away. Boom. If it goes wrong, we can get out. But if it starts going wrong for big investors, they can get screwed over, right?
Mm.
That's why you see stuff going down really quick.
I guess it's a nice problem to have. Look, I can get out quick.
Yeah, it's good. It's brilliant. It's honestly like we've got so much advantage over big retail. Institutional investors with lots of money. We're like little ants. We can get around nice and quick. Well, they're like big sluggish snails. Can't do anything. Slow for them.
Mm. No, that's cool, George. That's makes sense.
It's just getting your head around all these little different things. But once you do, you start to see it. You're like, you start creating a picture in your mind, eh?
Mm-hmm. No, it's been helpful.
Cool. Where are we? Am I going the right way? We did a bit of progressive exposure. And yeah, so just with the progressive exposure, it's just being careful. Once you get in, try a little position size small, and then maybe grow it. And if it's really working, then be greedy, fill your boots like the little piggy is. Be greedy. That's the time you can use your trading to give you an indicator of when to be greedy and not to be greedy, basically. And when you do, just fill your boots, be greedy, just like little piggy. And
oh, nice.
Final lap.
I hit the banana from recently.
Hey?
I hit the banana from recently.
Everyone hit the bananas. Level 3 complete.
First. Nice one.
Nice. No, again. Always do this. Quite good though, isn't it? I used to like Mario Kart. Questions. Any questions?
Oh, geez. I think I discussed most of the.
We had a lot of them, didn't we?
Yeah, it's good. Good.
Do you want to have a look at gold? I'm interested with gold a minute. Do you want to have a look at some gold?
Yeah, go for it.
Connor. All right, stop sharing. Let's have a look. I'll have a look at it first anyway. Oh, that's not it. We could do live market session, can't we? Oh, interesting. Markets have gone down a bit more.
I've not.
Down 400% again. I just keep looking at the NASDAQ. Oh.
I've not opened it today. That's a start.
Oh, gold. Have a look at. Oh yeah, we like this. Right, I'll share my screen with you so we can have a look at gold. Maybe is this it? There we go. Here we go. Here's gold. Have you looked at gold much?
No, other than the WhatsApp.
What I've been wanging on there. So if you look at it weekly, so this is Lambo. He showed me this, and I looked at it. I was like, "Oh, I like this." So look at it as well. It's gone up low. It's gone up shed lows.
Yeah.
And it's come down. It's making this VCP action. It's come down. It's come down, and you've got all these mean averages coming together. It's like, oh, this is nice.
Mm-hmm.
And if you look on the daily, it's just you've got the same deal. You've got this trend line going through here.
Oh yeah.
You got this trend line going up here, and this is just keeping price up, eh? You got these mean averages have. This is starting to do its thing. Like price is starting to stick to that, and it's starting to break out. So this is now I'm trying to be a bit greedy, eh? This is, as I was saying, I'm trying to build my position size like a big one.
Yeah.
And I'm looking at that.
Because I guess it's early enough that if it does break out, then, well, where was it before? If you look back,
it was up to up here. So yeah, this is in a nice early stage of. A lot of people would say just buy it here, but once I see a nice, like, look at that structure there, it's perfect. It's like higher, low, and that when I see that was a higher high here, that was a higher low. Once I see the higher low of this next one, just touch that and then go. For me, that's like really just a sweet structure. It's not messy. Well, look at that one. It's like real messy. It's like, but here it's just got really nice and flowy.
Yeah. No, I got you.
So, yeah, there's a trade for you if you want one.
Yeah, no, it's. I'll
have a look. See.
I'll look at that, and then would you expect? So, is it looking like it's going to then come back down? And
so as I said, I have a feeling it will retest this trend line. I have a feeling. I think it might come up here.
Yeah.
And then retest.
Yeah.
And then go back.
And
potentially it might come up here, it might fucking settle and ping off.
Yeah, okay.
Who knows?
No, that is. I guess that's the pattern that is always being talked about. The VC, and I guess that's an exact.
Oh, it's lovely. And I've also been looking at high grade copper. I don't know. Oh yes, so this is look at high grade copper as well. It's doing a similar thing actually. You've got up down. It's come up here, tested this once, twice. It's found support again on here. I bought it here at 3 points. I didn't like it when it come down here. I got out just because I didn't like it. Only half of it. This is an example of I got out in half and left half to run.
Okay.
Because it went below these mean averages. I'm like, oh, I was thinking this might keep support here. But it went below my area of support and it's come down and retested this. But it's not the biggest. It doesn't matter too much. But now I'd want this to come back up.
Mm-hmm. I've never really traded like metals before.
Nor have I really. It's only because Lambo said.
Yeah.
But I suppose the only thing is I'm not too sure because I don't know. Yeah, I suppose in my mind, copper is obviously good for EVs and everything, which is the way it's going, and wind turbines and blah blah whatever. But I don't know. I don't know what's going on with the market, to be honest. So I'm not sure if copper will go with the market or it will stay up because of EVs and things like that. I suppose we're wanting more and more copper, so I'm just going with the pattern, to be honest.
And is the volume not that like? Is it becoming less and less? Is it like following the VCP kind of thing?
Again, these probably it's not as easy. Oh, I tell you what, that'll tell you a lot easier, won't it? If I go like this, that's better. Don't know. In a way, I suppose from down here. Yeah, maybe down here. Yeah, I suppose well, don't know really.
Or I guess the recent moves that they all like the amount of effort is like reflected in the price or whatever. Yeah.
Yeah. But it's just quite a nice, interesting pattern. I just like the pattern, really.
Mm-hmm.
It's getting supported underneath here and it's just turning. Just need to see if it can get up above here, then it might be.
Mm-hmm.
I suppose think of it in this way. Price went up here. There's a lot of people bought in here. Prices come down. Price came back up. These sellers got out. It came down, came right back up. And these lot up here were like, I'm getting out of here. And these lot made some money. So it's come back down there.
Mm-hmm.
So now this has come up. These people trapped, gone down. This has come up. People trapped here, came down. So maybe we're getting rid of if it keeps turning around, we're getting rid of the trap buyers now. I mean, trap sellers. There might not be many sellers left.
Yeah. Okay. Yeah, it's I need to like look back and like think like that, like people getting trapped and I maybe sometimes don't always think about like where people's stops are getting hit, resistance, and where people are normally getting out.
Yeah, exactly. And yeah, think about it. It's nice to think about those things and just get your head around it. Because once you get your head around it, it's sort of in your subconscious and you don't have to think about it.
Mm-hmm.
But remember, the most important thing is your risk.
Yeah.
As long as you stick to that risk and you're buying at the right times out of the VCP, up or down, then you're timing. Then you've got your timing there bang on. Because you've seen most of my trades, they were pretty much to the day, really. All right, I could have had some a bit earlier.
Yeah, but like you say, that it doesn't really matter, does it? If you're at the exact timing, or as long as
better. Like for me, I'm aiming for the same day.
Yeah,
I want to be bang on. To be honest, I want it to be to 5 minutes.
Yeah,
because then I haven't got any pain waiting, or I think my stop's going to get hit. I've just got it bang on.
Yeah,
and then that gives you confidence. The more you get it bang on, the more you're like, well, I'm just going to increase my position size then because I'm getting everything 100% right.
Yeah.
Then it becomes easier. Then it's compounding. How can we put it this way? Compounding perfection rather than mistakes. We don't want to compound mistakes.
Yeah.
And then closer we can get to, all right, we're not going to get it perfect. We shouldn't be getting attached. I don't get attached to if it's right or wrong, but the more I've just played around with this, the closer I've seemed to have got to the buy point.
I think as well, I think as I get to know a share, it kind of having that kind of, figuring out what its likely next behavior is. Maybe because you've been involved in it rather than if you've not been involved in it, it's quite difficult to read sometimes. I find. Well, maybe not read.
No, I know what you mean. Yeah,
you've got more of an understanding because you're involved in it. I think sometimes
you got a better feel, eh? Like I did with Tesla the other day. I thought it was going to go up, and it was like, oh, I got a bit of a feel for what was going on then.
Yeah, I guess the big takeaway for me today is the risk side, which I've kind of known about it in the background, but whether or not I've bent my own rules to. But it's by bending of the rules that'll see me out of the game.
Exactly. And like I said, at some point, I want to go into the psychology and everything around this. And it's like, what is it that's making me bend my rules?
Mm-hmm. Yeah. Yeah. It's probably quite interesting.
Yeah, exactly. It gets really interesting. As interesting as gold. Have a look at gold. Look, 5 minutes. Look at this. No, look at that. See? You get a nice, look, a shot up out of here, didn't it? Zonk.
Yeah, so like, see when you go, so you've got spot gold on your daily, right? So see when you go into the smaller charts.
Yeah, like 5 minute and...
Yeah, so say you're looking at before you go and, confirm or commit to, I guess you're looking at all the different charts.
Yeah, anyway, because I never used to look at weekly, but now I do. No, I look at it sometimes. I'm like, oh, that looks nice.
Mm-hmm.
Then I go to the daily as we looked at it. It's like, oh, that's doing what I want. That's doing exactly what I want. And then I'd have a look at the 4 hourly, because at the 4 hourly as well, where you can see it.
Yeah, I find it quite useful sometimes.
Over here, like I said, it's like it's not really sketchy, but over here it's like zoop, 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 zoop. Really nice.
Yeah.
Just giving you a hint.
Yeah, no, that's good.
Yeah. Just have to put our stops below here, or even below here if you want to make it safe. Because what is it? Let's have a look. So if you go in here and you just look for measure tool.
Ah, right, okay.
So for example, here to here to down here, 1.2%. So it's quite a nice stop. That's tight, eh? You could have it just down here, 2.5%.
So that's 1.2 or 2.5% of the value of the share, isn't it? Exactly.
But you just make just keep that risk in mind, eh?
Yeah, okay. So I guess it's still risk should govern.
Yeah. But yeah, risk governs everything. But as I said, I always let's look at Alphabet, for example. When I made this trade, my stop was up here. I did it on the high. I basically put my stop at this high of the previous day, because I was like, well, if it's going to do what I think it's going to do, price shouldn't. I don't want price to come up and go past that, because that would break the higher high or the lower high. And at that point, my stop was 2.29%. But I also knew that once price broke this support line, does that make sense? Because I've got this support line. I got this support line here. So basically, what's happened when you've got this support line, you've got this trend line. So what's happened? Price has broke through the trend line. It's gone through this support line. Then it's come back up. I thought it might retest that trend line, but it didn't. It's basically come up, pushed through that resistance line now. It came up, touched that, and then came below it. So I was like, oh, if price is going to go below that, then I'm in. So I've sort of timed it.
Yeah.
It shouldn't be coming back up because it's already tested resistance and come off it. So price shouldn't be going back up.
Mm-hmm.
So that's why I can have my stop really tight at 2.29%, because my probability is really high now of price is just going to go.
Because I guess that you've got your 3 green candles and then you've got your bigger red one. I guess that's telling me that there's more sellers about than there is. Yeah,
and think of it as well. It's the that was support. It's got broken. Now it's getting retested as resistance, and price is coming off it.
Mm-hmm.
Remember, yeah, it's always remembering that support
Yeah.
turn into resistance, and resistance turn into support. And you've also got the mean averages coming down, and people selling off the mean averages here. There's lots of things here to give you probability that that's going down. It's putting all the parts of the jigsaw in play and being like, right, I've got prices come off up here off the 50 daily moving average, because people always sell off here. It's broken the trend line. That's giving you 2.
Yeah.
Do you know what I mean? The 200 daily moving average is starting to turn. So
Yeah.
it's giving me another one. Price has broken through this support line.
Yeah.
It's turned to resistance. That's like 4 or 5. Do you see what I mean? It's giving me 5 or 6 indications that, do you know what? I think this is going.
Yeah. So that was interesting what you said about I know about the 200. That's that's one of the biggies. About the smaller ones, the 50 and the 10 and the
20.
10 and the 20. I never really use those. So
yeah, no, they're really handy. Price always comes off them, and the 50. Like I said, 50 is really good for selling.
Where's your 50 and where's your 10?
There's the 50 here. So that was it. Price went up above, it went below the 50 there. It came back up, went below the 50. And then wanted to come back and got pushed right off this 50 a few times here.
Yeah.
And you got those mean averages really come. Look at them. They're so tight here.
Yeah.
That's like, oh, wicked. Then price is just going to builds off from there. Like I said last week, when you get the mean averages really tight like that, that's giving you another indication there.
So that's a sell indicator, is it?
Yeah. And also look at it now. So when we're looking at price going up, so we're looking for volume, we're looking for like buyers coming in.
Yeah.
Now it starts to turn, so it's going the other way. Look at all the buyers.
Yeah.
I mean, look at all the sellers now.
Yeah.
So it's just turned itself on its head, basically.
Yeah. Yeah, because I guess I wasn't in Alphabet. It was another one I was in, but I think it was Meta. But yeah, I guess like it's been running for quite a while now, hasn't it? So it's no surprise that bounce did come back yesterday.
Yeah, there was going to be a bounce, wasn't there? I don't know if you ever looked into what it's doing. And gone down a bit again. But I suppose what I find with indices is that this is going to be the support area around here, right? I reckon. That it had big support off there, so it probably might go down, retest. It might have, like these always have, like around here, you have 1, 2, or 3 tests. And then it starts to turn around, then it'll probably come up. But I don't know where it's going to come up. It might come up and retest up here. I wouldn't be surprised from where it is now. It comes up, it comes down, it comes up. It might have 2 or 3 tests and then moves. Because it's done that. Oh, I always sort of go back and have a look.
So you shorting this just now, George?
No, I missed. God, I wish I did. I was messing around. I was trying to buy it. I thought it might come up here and go off, so I bought it down here, and then it didn't. I didn't sell it, and I just met. Yeah, it'd have been lovely if I could have sold it up here. Look, what that amazing freaking! It'd have been wicked, eh?
Mm-hmm.
But they're interesting indices. Once you look at them like this, they're actually quite easy, but they do move so quick, and it's. I always look at the 5-minute charts quite a lot on the indices.
Mm-hmm.
It blows my mind a bit, and it takes too much time to fucking look at it, so I can't be asked.
I always remember your snowboarding van story.
What was it? Oh shit! Yeah, I forget I was doing it on my phone, wasn't I? And lost like 30 grand in about half an hour.
Yeah,
that was. Yeah, there's a lot of interesting, weird shit going on underneath that, I think. Yeah. Don't do that. That's yeah, don't do that. But we do like gold.
One thing, I don't use Stockopedia, but do you check? Do you use the dates? Before like news, like so. Say you're maybe not spot gold, but say like Alphabet or whatever it is. Do you look at the date that then they're due for
the news
quarterly results, or do you look at that before? Or not?
Yeah, I do. So now that I'm in these, I haven't got my spreadsheet. So what I do on my spreadsheet, I will. Let's see if I can show you. Can you see this or not? Are you still looking at the
It's still IG.
Still IG. But yeah, based on that spreadsheet, on the positions I've bought, I've got a bit in there which says news, date, and news. So I just put in a date and what quarter it is. And because if the news date is on that day or a few days before, I won't buy it or I won't sell it just because it's not a good idea to. But if the whole market's rolling over like now,
so
I would just get in anyway. And
do you get your dates from Stockopedia?
I don't really use Stockopedia. I even forgot about it. I use MarketSmith.
MarketSmith, okay.
Which is it's really good for. It's what Mark Minervinis uses basically for finding positions and finding ideas. I mean.
Oh yeah. Okay.
Yeah, it is. It's really it's good.
And it's
good. It gives you the news dates. It's quite nice. But let's have a look. See so if you can actually get the news dates to come up on IG. Did you see this down here?
Oh no, I didn't know that.
Yeah, that's a news date. So if I was to move this, I don't know. Hasn't got it up.
How do you get that up then, George? How do you activate that?
No. Someone told me. Let me have a look. There is a way. What's this? Open position preview timeline. Price changing it. Events. They are. Company earnings, dividends.
Oh, I got you.
So just go up there. That was the one. Events. Company earnings.
All right. That's quite useful because then that's obviously quite a volatile or potentially volatile.
Yeah, it's especially if the markets are good.
Or would that be something that you'd look at as maybe a shorting opportunity with?
It's interesting because you'll find if you're looking at a stock, some stocks, even if they've got good earnings, they won't go up on the day.
Yeah.
They might even go down on a day, wait a few days to digest and then go.
Yeah.
So you just got to look at it and just have a look and see what it does. Do you know what I mean? Rather than guessing what it's going to do, just wait and see.
Because I guess it's pretty risky. You don't want to be doing it like the day before, because I guess it could gap up or down.
Yeah, exactly. And if you got your chart in right, like for example this, and you've got all the indicators and it's telling and it's everything's showing you that it's going to go down, for example, then for me that's already telling me the news.
Yeah.
Do you know what I mean? The news is the profits have probably not gone up, or it's like, or it's at the fifth stage and it's just going to go down anyway.
Yeah. It's quite interesting, isn't it? Because it's like, obviously we were a naked trader and he doesn't really use the charts quite as much, but he uses fundamentals. But I don't see how you can't get away from what's happening in the charts. And I guess like Mark Minervinis, some of his stuff's been quite interesting, isn't it?
Yeah, totally. And for me, like, once I've understood the VCP stuff and the stuff that I learned from trading with Rayner, it all put it together for me, really. It was like, oh, yeah, okay.
Mm-hmm.
I'm just looking for, it's really just looking for a structure of price and for it to do an uptrend. Is going in an uptrend, a downtrend is a downtrend. What are the indicators that is in an uptrend? What indicators are when there's a downtrend? And once I've been able to draw trend lines and stuff like that, it's like, oh, that makes sense. Makes it so much easier for me.
Yeah.
It's just getting the drawings right and knowing about the support and resistance, and when price or support changes to resistance and resistance changes to support, and looking for that.
Yeah.
And using the mean averages as your tools to help you.
And have you, like with cryptocurrency, have you kind of dipped your toe into that, or just try and stay away from that kind of thing?
No, I did do, but I've got Bitcoin here. I'm looking at it just because I find it really, it's very interesting, isn't it? So, but I bought it down here. I bought it when it was really nice down here.
Is that because can you trade Bitcoin?
Not at the minute.
Professional?
No, I got to be a pro trader. So I've been trying to blag them and say that I've been telling them I work for Barclays Bank and everything. And like the last woman who came back to me was like, "Oh, we need you to send us some references or blah blah from Barclays." I just emailed about. I was like, "Look, I'm just trying to blag you. I haven't worked for Barclays. It's the last thing I want to do, but I'll just get back to you soon when I've made myself up to 500 grand, and I'll speak to you soon."
And is what? That's what you got to be pro, is it?
500,000 euros. So I'm getting there now. I basically need to get up to about £450,000.
Cool.
I'll be like, cool. I can get me a trade, get me pro, and then I can fuck around with some Bitcoin.
And how long?
I would have loved to have shorted. I would have loved to have shorted Bitcoin recently. It'd have been wicked. Look at it, amazing. Like everyone was, and this for me, like Bitcoin, it gapped down here, and I was like, "Why are you buying? It's mad." And then they kept buying, and they kept buying. It's like keep going. It's like, oh, I don't know where Bitcoin's going, but I know that. Think of this. This was the previous high. See you later, Bitcoin. I reckon it's going back down here. It's broken this. That was the support. It's broken that. Don't be surprised if it comes back down here now.
Yeah.
People are going to be very sorry. People are going to be holding on to. I don't know. Yeah. I can't say because I can't tell you what the market's going to do. But if it does, ouch for some people.
Mm-hmm.
But I hope it does because this is when I want to buy it.
Yeah.
Or I do it like as it did the same thing. Like VCP, boom, boom, boom. I bought it over here.
Yeah.
I bought it here and I bought it here. I got shit out around here because I was in a bit of fear. And then.
So was that before they changed the rules? Was it?
Yeah, they changed the rules around about here, and I was like, "Oh, don't do that," because I want to play with it up here. But I was in fear, so I just sold. It worked out. It was cool. It was right. If I could hold my positions and just let it all blind me, that would have been amazing. But I was in fear.
Not pretty volatile. Well, how do you work your stops? Just are you still able to do your 1 to 2%?
Yeah. When you buy at the right time, eh? Like down here, as you see, the volatility just really went.
Yeah.
So that's when I bought it, when the volatility went. And then people start buying it when the volatility gets mad, eh? It's like...
Yeah, so I guess now it might be quite difficult to keep your risk low, is it?
Well, think of it. If you wanted to short Bitcoin, again, this comes from timing, eh?
Mm-hmm.
If I was going to short it, I would have been looking around this mark here. I would have been looking to short it when it broke this trend line. Or even this here, because you had this nice support line here. There's already made nice support, probably around, well, it's here, wasn't it? There was support around here somewhere. There, I reckon. So that's what I would have looked. Once my trend line, when my support line got broke, I would have been looking to sell it then. And I would, let's say I was like, I might have got a bit early and it broke, so I sold it here. But I would have had my stop above that, up around here, which still wouldn't have been. Let's have a look. If I was like, all right, I'll keep my stop up here, 4.6%. So no, it's not a lot, eh?
Yeah, okay.
It's just knowing to wait for these times of when the volatility goes and then it breaks.
Mm-hmm. Be patient.
Yeah. Be patient. Trade like a shark, as what's his name says, eh? And just waiting for the right time and be like, cool. Something's going on here. And I don't want my stock to be any bigger than 5-6%. Cool, that works out all right. I'll make my risk to suit that and position size to suit that.
Mm-hmm.
And look, it's worked. And then, I would have done a short here. Or maybe, I'll do another short here. This is good.
Yeah. No, nice one. Nice one, George. It's been
It's been a long one.
Okay. I'll have a look at spot gold.
Yeah, have a look at gold. It's intriguing me. I better not add any more. But it's, like I said, it's sort of doing what I'm expecting at the minute. It's making it's keeping going. So, yeah, get your mittens on it.
Yeah.
Nice one, man.